Hello traders, hello everyone. Welcome to our new webinar. Is everything working fine? So we are streaming this to YouTube and also on TradingView, obviously. So just please confirm in chat boxes if everything is fine. If you can see my screen, can you hear my voice? All good on YouTube, perfect. Okay. So, well, markets are quite calm and quite stable today, despite some risk off flows at the end of last week. But we have some of important key economic data for this week. As you know, tomorrow we have Bank of Japan. Then it's also, I think it's also tomorrow, the US ICM manufacturing PMI data. Then we have the FOMC on Wednesday, and also Bank of England on Thursday. And probably the most important will be the non-farm payrolls report to see if maybe there are going to be finally more jobs lost or no in the US. So firstly, I want to again bring attention to this 10-year US notes, because I still think that this is the yields general are very important for this market. We had on Thursday the ECB, which somehow signaled that probably they are done with hikes, and also markets do not expect any kind of a new hike from FOMC and from also not from the Bank of England this week. So it can be maybe time that the US yields or yields in general could potentially hit the resistance. Of course, I'm looking here at the big time frame. So obviously, as you know, for these cycles to turn around, we need a lot of time. So obviously, maybe these trends will still stay in play till the end of the year. Who knows? So what we are looking at the 10-year US note still potentially at the late stages of very big 5 waves of decline. Large speculators are heavily short. Also, we had this data as well based on positioning here going back to 2018. So because of extreme positioning, because of this extreme sentiments here on all of the markets, of course, I am aware that something will change, and especially if maybe there will be a new speculations, let's say that markets will come significantly to the downside, let's say that economic activity will be in a big contraction, then we can maybe see some bets suggesting that there will be cuts maybe from central banks in 2024, and that's what will obviously drive this market around, okay, into the opposite direction that the current one. So I still think that the dollar could potentially be headed into the resistance, but again, these are just longer term charts, okay? We are still not seeing this actually happening, okay? So looking at the 10-year US notes, maybe it's a good idea to check some of the intraday structures here as well. Notice that here potentially we have 5 waves down. I'm not sure if maybe this is still extended wave free of a higher degree bearish impulse, but looking at this intraday chart, intraday price action, I just assume that maybe some more weakness could be seen here, meaning that US yields are still going to print a new high, and this could potentially make some more strength for the US dollar, especially if risk off will also stay in place. Okay, but now we have seen some very interesting reversals on Friday, Thursday as well, maybe on Aussie. Some commodity pairs, some commodity currencies came to the upside. So I think that if you want to be maybe long US dollar, you should watch for the weak currencies like euro or pound, for example, especially euro because of the latest ECB decisions. But if you want to be maybe looking for shorting the US dollar, then watch out maybe for Aussie, okay? Because Aussie, everybody is also looking for potential more rate hikes, especially after inflation data came higher than expected last week. So I think that these divergences between central banks could potentially make some very interesting trades, maybe even on some crosses that I will also cover them a little bit later. So the 10-year US notes for now still that's a downtrend, but I'm aware that maybe we could be seeing a potential bottom. Who knows? Maybe that's also some kind of a wedge here. But still, because the rise from the recent lows is not in 5 waves, it's rather looking corrective. I think the dollar index could resume higher. But as you know, dollar index has also, obviously because of more weight of the euro than other currencies. I think that if you are looking for more upside on dollar index, best potential trade is shorting the euro. Okay. Before we go to the euro, let me bring on dollar index. So dollar index here, what's maybe the most important is that we have seen a move to the upside from a new low, okay, and we broke this channel. So I think that this trend is still alive. As long as we are trading above 105.36, there is a chance that this market will continue even higher, will stay in uptrend. But if this level is broken, then we know that these trends could potentially be changing. We are still holding prices above this March high, which is very, very important and big support. Okay. Also now, since I said that maybe euro dollar could be very interesting, obviously we held this resistance pretty well. Okay, on Monday or Tuesday last week, we said that 107 is very important resistance. We have immediately see a reversal to the downside on Tuesday, so it was a perfect textbook price action. Normally, when you see on Monday very sharp moves in one direction, well, somehow I tend to look at these Monday flows as not real flows. Dynamics will normally change during the week. So on Tuesday, we have already seen this happening, especially ahead of the ECB press conference last week. Okay, because I really doubt that some will put some very big orders on ahead of this important key event, and that's why we have seen a very nice reversal to the downside. Now, when I'm looking at this price action, I still think that this weakness is in place and could potentially resume even lower. For now, again, it's in Monday. We have some very interesting flows to the upside, but again, there could be a new Tuesday reversals within the next 24 hours. Okay, so potential 106 is very nice intraday key resistance here. On a big chart, still, I think that we are in a flat correction, potentially in late stages of wave C, but because we have only 3 waves up on the intraday charts, I just think that it could be too early to say that wave C has bottomed here. Obviously, we can be seeing another push to the downside. So 104 is maybe a very big key support. I think that towards the end of the year, we could already be start seeing some potential bottom formations. Okay, but for now I think it's a little bit too early. But even if euro would come, let's say, to the upside and break 107, and suddenly a dollar index would break 105, then of course I would leave euro dollar on the sideline and I would most likely focus on dollar shorts versus strong currencies like SET. Maybe commodity currencies like Aussie could be very interesting play on the long side. Okay. So euro dollar for now sideways and steer bearish within this wave C. Also, let me take a look on cable. So we have on Thursday we have Bank of England. I think it was the inflation was 6.7, the latest data, like the previous reading, but still 6.7 is very high. So we will see how Bank of England will react, but I really doubt that they will make any kind of surprise or hike further. I think that expectations obviously are on hold as well. So due to that, I think that this trend may not change if policy actions will not change as well. So I think that we are still here missing a new final push to the downside. This rise was in 3 waves, and also notice that we stopped at the 38.2% as we already discussed last week. And so far, we are not seeing the completion of a wave 5 here. But if price action will remain slow, like current one with some overlaps, then maybe this could came out as a potentially as an ending diagonal here to complete the higher degree trend. So very big support still at 1.18 up to 1.19. That's the key support area where I would be looking for potential stabilization if we are going to see these levels. Okay, so cable still bearish, currently just sideways within this higher degree downtrend. So as you can see, euro and pound are weak. And now let's take a look on Aussie. So Aussie, in my opinion, is doing much better. Okay, as you know, we were discussing about an ending diagonal here in wave 5 last week. We said that we are still missing a new low, and we have seen this break to a new low and now beautiful reversal. So if potentially, let's say that risk on is back, that stocks will try to stabilize this week, which I would not be surprised if that would be the case, because we had a pretty aggressive selling recently. So maybe these flows will now change a little bit in the week ahead. And if that would be really the case, I think that Aussie could be pulled even higher. So Aussie is certainly in my watch list for potential longs. I will wait a little bit longer to see if we can break this trendline resistance, and then potentially I will be observe the pullbacks. But so far this really looks promising. And why I have this one on my watch list is because I know that if ending diagonal is completed, the moves can be very sharp and aggressive in the opposite direction. And this ending diagonal could later on, as you know, send us all the way back to the starting point of this pattern, which was obviously here at the former wave 4 at 65.20. So that's definitely attractive level on the upside if we can break this trend line. And obviously the most important would be to see a break above this bullish level. Why I have this marked as a bullish level? Because it's the first swing high that could be potentially broken here. If you look back, well, there were a few swing highs, but always afterwards we have seen a break to a new low and not break to a new swing high. Okay, so always when we have seen a reversal from a new low, this previous swing high stayed in place. Okay, so in my opinion, I think that if this will happen, because we reached a new low and now we are turning higher, if this breakout will happen above these two levels, I think that we could be dealing with a potential bullish reversal here. Okay, so and also not only because of that, I also said that RBI also highlighted last week that they could be looking for further rate hikes if needed. And because of the inflation came again higher last week, obviously so on I'm waiting my charts to load up. I'm not sure why they are so slow. Okay, I cannot see the wave levels yet. Okay, anyway, can you see my charts? Is everything okay? I'm not sure if TradingView has some lags here. Okay, now it's better. So Euro Aussie here is testing this channel support line. Okay, and what I'm seeing here is that the potential breakdown could occur. Okay, because clearly we had a very beautiful reversal here from the recent highs, and now we are just slowing down here potential for a corrective recovery. So I think that if we break below 65.50 and make a daily close below that level, or even better weekly close, I think that Euro Aussie could be headed much lower. Okay, so Euro Aussie, I think that we could be dealing with a potential top if we now also switch to Pound Aussie. Okay, now Pound Aussie is also looking for potential top formation. So here we have left shoulder, head, and the right shoulder, right? And now we could be seeing potentially a new breakdown in the next few days. Okay, as you know, that's a bearish head and shoulders pattern, and what I really like about this potential top formation, or I should say about this head and shoulders formation, is that goes in line with the Elliott Wave principle, because sometimes you will see that someone will look for head and shoulders pattern, but if you will also try to use in the same market and apply the Elliott Wave principle, I think it's even better to have that when you see that both analyses agrees. Okay, so what I'm looking at here is potential breakdown for wave C, maybe even wave 3, I'm not sure yet, but I think that this is a pretty nice consolidation on the way down. Okay, so I see Australian dollar as a potential very big mover going forward, especially versus against euro or pound. But on Thursday we have this Bank of England policy decision, so maybe the euro is maybe the best play on the short side versus Aussie, because we know what the ECB plans to do, but not really convinced what on Thursday will happen from Bank of England. Okay, so that's for pound Aussie. Now also let's take a look on dollar yen. So we have seen a pretty nice reversals over the last few sessions on dollar yen. So here I'm bringing on the 4-hour time frame. Notice that from the last time I adjusted the wave count a little bit, because I still think that that's maybe more appropriate labeling, because the market, the bulls were struggling a little bit here when we're moving to the upside. So I came out with an idea that maybe that's a wedge pattern, because based on personality, that's something that fits the best to this price action. Whenever the price is slow, normally this represents the late stages of the trends, especially with the wedge shape. And so far we have seen a very nice reversal from last week. And there are more and more speculations. Even Bank of Japan itself keeps repeating that maybe yield curve control will have to be adjusted. They are watching the FX levels as well, and they will act if needed when appropriate. Of course, they may want to do it, but not that aggressively, and maybe don't want to surprise the markets too much. Who knows? Because if you surprise them too much, the markets may overreact. But still, looking at this pattern, I think that we have very beautiful potential reversal going on. And if you will check your smaller time frames, you can actually count 5 waves to the downside here. But tomorrow is Bank of Japan, I think, policy decision. So we will see if this could be potential catalyst for the mover. Of course, for the move, of course, everyone is waiting for something big to happen on these dollar yen pairs. But some of the yen crosses are still potentially in bullish consolidation. Especially, I'm looking like euro yen, pound yen, Aussie yen, all of those. So keep in mind that even if you tend to trade these crosses, and if dollar yen will make a very big move to the downside, then of course those crosses will also be impacted. So make sure to realize about the potential risk here. Now, also let's take a look on crude oil. So last time when we were doing those free analyses, you exactly know what we were talking about on crude oil. Everyone was so bullish out there on crude oil because of geopolitical risk. Of course, that makes sense, but keep in mind that after a few days, markets was already up here in energy 10%, some other markets even more. So I thought that, okay, markets news came out, the market priced in, and that's it. Okay, and sooner or later, even if sentiment is still bullish, we should be aware of the opposite. Okay, because each day then market will try to and wait desperately on anything new from the media or from the OPEC or who knows. So I think that this geopolitical risk was already priced in up here, and that's why we have seen potential reversal down into wave C, which in my opinion is still in progress and have lags for more weakness. So what we are seeing here is, and what we have seen, a very nice break out of this corrective channel that's an impulse, and now you're again slowing down. So I think it's a wave 2. Potential resistance, if we go a little bit higher, which is still very, very probable, it will remain around $86 to $87 per barrel. So after this consolidation, I will continue to expect more weakness here. Okay, so I will be looking for weaker prices, but keep in mind that this could be still somehow only short term. Okay, because on a daily chart, I still assume that maybe that's wave B correction. So very nice support remains around $77 per barrel. And if we consider that that was a 5-wave up, so maybe this is just a temporary correction, and we may not expect any kind of a new aggressive selling towards these 2023 lows. This still could be just a temporary middle correction within this recovery. Okay, so very big resistance, in my opinion, remains around $100 to 105. Okay, so that's for crude oil. Now let's take a look also on gold. So gold is coming very nicely to the upside. We talked about this a lot. We called this breakdown for wave C. We call this reversal higher. And I still think that this bullish trend that is now in play should continue. But of course, just be aware of some pull to the upside for the next 5 days, meaning for the whole week. I just realized that maybe something more complex will still unfold here back towards 22.40. So we could potentially bottom, but I still think that there is a risk that this support will be retested here at 22.30, 22.50. So from a head and shoulders perspective, you are now in the right shoulder. If we start breaking higher and make a close around 24 and even higher, that would be a decisive break out of this head and shoulders bottom formation. And in such case, we would expect much higher prices, more likely towards $25. Okay, but as I said, even from an Elliott Wave perspective, let me go back now. So even from an Elliott Wave perspective, I think that we are dealing with a beautiful pattern. We have impulsive recovery after this very strong drop, where I believe that a lot of traders went out from potential longs, but then market turned around very beautifully. So now when a lot of longs were stopped out, a lot of traders who were short were stopped out, I think that it's a very perfect pattern for this continuation higher. So as long as we are above 22.70, I think that silver could see much more upside. Okay, and also not only silver, maybe try to look what will happen with the Swiss franc. Okay, now this Swiss franc and silver will have a positive correlation. So here I have, okay, that's dollar Swiss, okay, versus silver. But now I will invert dollar Swiss so that you will see the correlation, okay, how tight the correlation is. So invert the scale, and here it is. So you can see that Swiss franc, okay, is coming to the upside at the same time when silver is recovering. So I think that if you maybe try to take advantage of some of the moves on the FX markets from potential upside on metals, maybe keep an eye on silver. On Swiss franc. The only thing that goes maybe against Swiss franc longs is inflation. It came down, I believe, below their 2% goal, their inflation target. So this could mean that their national bank will not be hawkish anymore. This could potentially provide some resistance for the Swiss franc. But generally speaking, if silver is really going to see a new bull run, or metals in general, the Swiss franc could benefit from that move. Okay, also keep in mind that Swiss franc is like a safe haven, and it's very stable when you're seeing a move down on the crash down on the financial markets, of course. Also, can gold make a new high as wave 5 without double bottom? Of course it's possible. It can move straight to the upside from here, but anyone who wants to be long, I just think it's a little bit risky to buy at these levels. Okay, it's late. It's too late to be long, maybe too soon for shorts, but maybe to step on the long side after pullbacks, it's better, especially from a price perspective. Now let's take a look on DAX. So DAX is coming to the downside. We are seeing move back into this very important support, I believe. Okay, so you can see the whole zone here, or I can make it even better like that. Okay, so you can see that there was a break higher here in March of 2021, and then we came close towards these current levels as a support. Then we broke down. It was the resistance. We broke higher, again support, and now you're again here as a potential support. So maybe there can be some buyers that will show up here in the next few days. Also, we can potentially count 5 waves down here from that September, August, September highs. Okay, this potential is 5 waves down, and we could be seeing also final push to the downside to complete this final leg. So maybe we are going to see another push to the downside, another new low. So 14,400, that's potential key support. Okay, but why I'm seeing more weakness in the near term, why I think that maybe again that we could see here another leg lower, is because if you look closely here, after open here on Sunday, okay, after this weekly open, it was Monday midnight, what we have seen is that market gap lower. Now you have very small gap here down there. Okay, so I doubt that this was the low. I just think that maybe there will be another push to the downside from this potential triangle. Okay, and then we see maybe final leg lower, final low, maybe sometime this week, but I really doubt that the market will has bottomed here. Now let's take a look also on the S&P 500. Again, traders, if you're watching this webinar for the first time, make sure to press the like button and also make sure to subscribe to our channels as well, and I will make sure to provide more of this content in the future. Okay, and now the S&P 500. So we have seen a pretty important overlap last week. Okay, notice what happened. The market broke below 41, 70, 80, around there. Okay, and what this means is that the rise from that low has been made by free waves. And whenever you see a free wave movement, it means that either the correction is completed, or the market is trapped in a higher degree complex correction. I believe that we are in a higher degree complex correction because the first leg here from that high is also unfolded in a corrective subdivisions. Okay, so this was the corrective leg, and now it's another corrective leg. So there is now a few possibilities left for this wave 4. Ideally, it can be a triangle, especially if we will bottom or find support around 4,000, or maybe even slightly lower, or who knows, maybe it can be even an impulsive wave C as part of a flat correction if suddenly we are starting to break down powerfully here. Okay, so unfortunately, I think that this price action suggests that stock market will stay trapped in a very big range for some time. Okay, but still, that doesn't mean if you're a trader there will not be opportunities. Especially when I'm trying to do connection with the FX markets, I think that there can be some very interesting ideas. Notice that we can count. I will just do the wave count here. Okay, notice that we can count 5 waves down from that highs. Okay, so we know that after 5 waves down, what will happen? Well, the market could potentially slow down for a free wave correction. So I think that maybe there will be a corrective rally, some relief rally this week, could see still retest of the lows, who knows. But I think that if we are close to the support, then it means that maybe Aussie, as I said earlier, who is doing very well, who is strong, could benefit from potential stock market gains. So I will observe stock market very closely. If we will see a massive move out of this downward channel, this will signal to me that we are bottoming. And in such case, I believe that Aussie would be even trading even higher. And then I would probably looking for longs on Aussie, maybe at market, and I will add on pullbacks. Maybe I will wait on the pullbacks first. Who knows? It really depends what will be the levels and what will be the range for, or the volatility, I should say, for from the recent moves. But overall, obviously, it's still a downtrend here, right? So I think that even if we get a relief rally, this could be only temporary. Now, the primary idea is still that we are here, as I said earlier, in a very big triangle, and that's the first leg, potentially, who knows, a wedge for a wave A, and you will see a wave B rally, and then the final wave C down within this, within higher degree wave C within a triangle. Another interpretation is that this is going to be a 7 swing move to the downside. Okay, ABC, wave X, and another ABC. You are now at the lower channel support here. So again, there can be some time for this recovery to show up, and the resistance obviously would be here at the previous swing high, swing low here at 42.30, and this former wave 4 at 42.90. Okay, and obviously this channel is also a resistance. So I have two different wave counts. Both suggest that we are in a complex corrections, and that most likely the weakness will resume. But there can be some relief rally in this week. Okay. Now, finally, let's take a look also on Bitcoin. Okay, or cryptocurrency. So Bitcoin has broken to the upside based on this some positive speculations for Bitcoin ETF launch. So what's the most important is that we have seen a massive move higher. And what I really like thing that is important is that even when we have seen continuing selling pressure on stocks, cryptocurrencies were doing quite well, and they were stable at the top of the recent price action, of the recent break higher. And next thing is that that cryptos even survived and are doing quite well. They're holding support despite the selling pressure that we have seen stocks on Friday. So we survived this weekend. We haven't seen any kind of a continuation lower on cryptos, and this tells me that we are pretty stable here, and that this break higher could be for real. Okay, so because in cryptocurrency in general, you will see plenty of potential breakouts that will then be immediately reversed in just few hours, sometimes in few minutes. Okay, so for cryptocurrencies, it's very important to wait and confirm the breakout when you have multiple closes above your potential breakout levels. So what I'm seeing here is a very nice potential break higher. Could be wave C, could be wave 3. Don't want to be smart to say where we are headed, okay, longer term speaking. But still, we could see a retest of the higher parallel trend line resistance here, potentially even equality level of the first leg measured from end of a wave B, which is here around 40,000. Okay, so that's definitely very interesting level. But for now, where we recently stopped is also, that's not futures, it's spot, but you will see that in the futures market there was a gap back from May of 2022 right at that area. But now when market is trying to stabilize and not seeing any kind of aggressive selling here from that futures gap area, I just think that that's good indication that market will stay strong. Also looking at maybe the 4-hour time frame here, what we are seeing is wave 4 potential triangle here building out. So maybe final push to the upside to complete the extended wave 3 will come this week toward 37,000. If we see any kind of a deep pullback, support, the first one that should hold is around 32,000. If we break that level and let's say we finish this week below these levels, below this support, then I'm afraid that something more complex and tricky is going on Bitcoin, and then obviously I will have to adjust the fuse accordingly. Also looking at the Ethereum, okay, now Ethereum is also trying to come to the upside. We are not breaking out of this channel yet, and I came out with an idea that maybe this potential breakout will still show up, and potentially, who knows, could be move into this wave 5 of a leading diagonal. So I'm bullish here on the Ethereum, expecting more upside. And if you recall last week, what we said is that this is the key support level here around 1750. So we thought firstly that way forward it's a little bit more complex, that could be a retested the lows, but then we said that if the support here, swing resistance is broken at 1750, then watch for this level to act as a support. And this is unfolding now very nicely, very perfectly. So I think it can represent wave 3 here, maybe this higher degree already wave 3, and that we could see a retest of this upper channel. So I think that 1900 is projection for this week. If we can break even higher, that's even better than for cryptos. Okay, of course, break below that 1660 will invalidate the current interpretation, and again this market could then become a little bit more complex. But I also have another wave count here, which is a bearish one, and I love to have the bearish interpretations as well, not to confuse you, but maybe to see if I have both wave counts showing me the same directions. Okay, and here I have potential leading diagonal from that recent highs, and if that's a leading diagonal, then we know that this motive wave is finished. And what would you expect? That market will rise at least in 3 waves. And so far, that's still only first leg of this correction that should then maybe resume towards 2000. So I think that even this bearish interpretation has a lot of room left for this recovery, especially after the next higher degree correction, higher degree pullback. Okay, traders, I hope that you enjoyed these webinars. I see that you put in some questions for Dow, Nasdaq, dollar CAD, natural gas. I will try to share those in our social media, and also maybe on some of the trading view ideas shared. So I hope once again that you enjoyed this presentation. If you did not already subscribe to our channel, please make sure to do this, and also make sure to leave us a comment, press a like, and support our work. Okay, traders, be careful out there. Also, we have some holidays, I think, in the mid of the week. My kids are also out of school for this week, so I will be on and off on my feed. So I will still try to keep one eye on the market, but it will be some time for my family as well. So be careful out there. Definitely there can be some interesting opportunities, and I hope that you will catch some. Okay, traders, good luck and talk to you soon.